Good morning. It is May 22nd. It's Monday, and we've got Biden and McCarthy still talking, trying to avoid the debt ceiling impasse here. Hopefully they'll make that work, but we're here to risk manage you through the Longbow platform. Let's head over there now. So I wanted to point out, you can go to the Doomsday Dozen. That's a tab that we offer you to see kind of where are people, where is the market? And this had dipped back down in the last few weeks. Obviously, we had some issues during the banking crisis, but now we're back up to a 78, meaning you got to be really careful here. So we ended up, call it until the banking crisis, we were telling you, hey, you got to be a little bit concerned. Remember, we were in the 80s. I think we hit, a little bit after that, it was high into, I think even at one day I saw it in the 86, but this is where it closes. But we saw a lot of reds here, but obviously, when people worry too much, then it dips down. You say, okay, you can buy now. But where are we headed back up? We're not really to these highs here of mid-April, but we are heading back. We're at 78. So what does that mean? That means that you should be cautious. You should be thinking about, with the VIX at still reasonable levels, protecting your portfolio. Yes, we hope that politicians will figure out a plan and not have a problem. But in the case that they don't, think about how it could affect your portfolio and what you might be able to do even for the short run to be able to manage this through. I did want to go through some of the different signals here and kind of how do we get to the 78? We don't give you the full math, but we do tell you some areas that you should be looking at. So there's a neutral on the fear or greed signal, and that makes sense because people have been positioning in a roughly neutral bent, people covering their shorts since the equity melt up. But you're starting to see some greed in the market momentum. So where is the S&P versus itself on 125-day moving average? You're also seeing extreme greed on market strength. So a lot of stocks hitting their 52-week highs versus lows. Again, looking back on securities versus themselves, it means that you're getting a lot of pump here. Market breadth, there's not a lot of breadth. Same with equity put call ratio. You're seeing only just a little bit of fear. These aren't very strong signals. The strong signals are in market strength. So stocks hitting the 52-week highs, the volatility, you're seeing greed. The one area, other than down here with yield inversion, you're seeing fear. This isn't junk bond. This isn't fixed income land. So junk bond demand, the spread between yields on high yield and investment grade, it's showing fear. It's showing field on yield inversion. This makes sense because we've seen a real difference between what's been going on in the bond markets and what's been going on in the equity markets. So they're taking two very different stances. Safe havens, extreme greed. So again, what does this tell you? This is how you're getting to the 78. The volatility versus volatility, meaning the S&P volatility, it's showing greed. Extreme greed versus PMIs. And we've talked a little bit before of why we look at PMIs, because it tends to be historically, from a data statistic standpoint, very meaningful on the level. So are we above, call it 50, 52? Is it increasing or decreasing around the world? And that's something that we compile for you here and give you a signal on. So all of those things put together are putting you in the 70s. That's saying, you might want to put on a little protection, or at least if you're looking to enter the market, today's not the day. Those are really the two basic takeaways from what we're showing you on the screen for the Doomsday Dozen, Longbow tab. That's it for today, and we'll see you back tomorrow.